Welcome, y'all, to You're Not Dead Yet, where if you're tuning in, you're part of the movement that's living at the crossroads of building wealth and living life. Today, we're going to talk about two things. One, the number one rule of investing: buy low, sell high, and why we as humans are programmed and wired to do the exact opposite. Two, we're also going to talk about Medicare. Medicare enrollment opens next month, and I oftentimes will get a lot of questions from clients as well as individuals that I run into when it comes to where do I start, what do I need to take into consideration, and what do I need to think about. So we're going to have a guest, Doris Lafevers. She is what I consider my Medicare go-to. If my clients or people that I meet have questions on Medicare and I don't know the answer, I'm immediately going to her. So we're going to hear it directly from her today on what to take into consideration when either applying for Medicare for the first time or looking to potentially make changes if you're already in Medicare. Because what you can or cannot do makes a big difference in your overall planning. Now, again, if you're 20 or 30, you're like, look, Medicare, why would I care about that? I'm 20, 30 years from now before I need to think about that. But remember, we'll have the conversation today. Is it going to be information that you personally need to know and can take advantage of? Probably not. But I assure you that you will undoubtedly run into somebody. Maybe it's a parent, maybe it's a grandparent, maybe it's an aunt, uncle, whoever it is that's in that process where that conversation may or may not come up, where you can say, hey, I heard something on You're Not Dead Yet about how that works. Let me point you in the direction where you can get more information. So now that we covered what we're going to talk about today, let's get going.
You're listening to You're Not Dead Yet with wealth advisor Chris McNeil.
All right, y'all, so let's talk about the number one rule of investing: buy low, sell high. We as humans are wired to do the exact opposite because of our emotions, which is why the average investor significantly underperforms the market, or in what most people refer to as the market, which is the S&P 500, okay? I always revert to this as like a time clock. So you've got 12 o'clock on the clock, that's funny. 12 o'clock, markets at our all-time highs, 3 o'clock, 6 o'clock, 9 o'clock, and then it comes full circle. Here's the problem is when it comes to emotions, all of us have FOMO, fear of missing out. So if you're at a party and someone's having a conversation about a hot stock that they bought, and you're like, you know what, I need to get in at that, you might be getting in at the exact wrong time because it's trading at an all-time high. So you'll go buy that investment and then it starts coming down and you're like, okay, I'm going to hang tight. I'm going to hold on to it. It's just coming down. It's come back. You're at 3 o'clock. You get to 6 o'clock, your emotions take over where you're like, you know what? I can't take this ride anymore. I need to get out. And you sell it at the low, which is exactly opposite of what you're supposed to do. You get out, now it starts coming back. You're at 9 o'clock on the clock, and sure enough, you're back to 12, and you're like, I missed out on all those gains. I'm buying back in. And you just repeat that process because of that fear of missing out, which is a really quick way to go broke. That's why it's important for you to work with a financial professional that can walk beside you on that journey when it comes to investments. Because just because something's selling at an all-time high, we may or may not buy it. But if we like that investment at a certain number, and now that same investment is down 20%, and the fundamentals of the investment and what we liked about it in the first place hasn't changed, then we love it at 20% down. It's like the market's on sale. So if you had a favorite dress or a car that you've been looking at for a while and you've been wanting to buy, and you're thinking about buying it here, and now it goes on sale for 20% off, you're probably going to pull the trigger and go buy that investment or buy that dress or buy that car. The market's no different, but it's interesting how people look at the market differently when it's down 20% or what's considered a bear market. So a bear market or a correction per se is when the markets are 20% off of their previous highs. So again, it's important to have a plan. I approach investing with all of my clients and refer to it as 3 buckets. You've got your income now bucket, your income soon bucket, and your income later bucket. That income soon bucket is going to be money that you need to access for your goals or for income over the next 3 to 3.5 years. And the reason we do that is that the average bear market recovery is about 18 months. The longest bear market recovery we've ever seen take is approximately 32 to 33 months, which means that that income now bucket is going to be money that's in relatively safe investments. Now I say relatively safe because there's not a single investment out there where you're going to be able to eliminate risk altogether. It doesn't exist. So if you have a plan in place, regardless of what stage of your life you're in, whether you just finished college and you're starting your career and you're contributing to your 401k or Roth 401k, or investing outside of that, and we'll get into that down the road, or you're 5 years from retirement, or you're currently in retirement, if you look at your investing and your planning on that 3 bucket approach, a pullback in the market isn't going to matter, because most of the investments that are going to be subject to that pullback in the market are going to be the investments that are in what I call that income later bucket, which is typically going to be 8 to 10 years or more. If we're down 20, it's okay. We can recover from that because we've got that 8 to 10 years plus for the market to recover from that. If we're in that same investment in the income now bucket, then that's where you find most people will panic and sell at the exact wrong time. So if it's in that income later bucket, we're good. We don't have to worry about it because everything that we need for income or everything that we're going to need to meet our goals in that first 3 years is in relatively safe, non-volatile types of investments that probably aren't going to participate in that pullback the market's experiencing right now. I hope that makes sense to everybody because it's extremely important to understand. And again, it comes back to the financial planning. Have a plan in place, have your buckets in place, and know exactly what types of investments need to be in each bucket. That's what my clients partner with me on, and that's where I can walk beside them and allow them to pursue that financial freedom and that financial independence. And instead of getting nervous when the market pulls back, we look at that as an opportunity to re-diversify if appropriate. And if we like a fund at $100 a share and it's on sale at $80 a share, we love it at $80. We're going to go buy that dress because it's on sale.
Do you ever feel like your financial goals are just out of reach? It's time to take control of your future with Premier Investments and Wealth Management, your partner in financial independence. Imagine a financial plan that's as individual as you are. At Premier Investments and Wealth Management, our team of experienced advisors will work closely with you to create a roadmap tailored to your dreams, whether it's buying a home, retiring comfortably, or starting a business. We believe in transparency and education. We'll help simplify complex financial concepts, provide clear guidance, and empower you to make informed decisions. Financial wellness is within your grasp. Visit www.premieriwm.com to schedule a meeting with an experienced advisor today.
Doris, you're the first guest on the podcast.
I'm excited.
That's
How fun.
so awesome.
How fun is that?
Thank you for coming. I
Thank you
appreciate
for inviting
that.
me. Thank
Yeah,
you.
absolutely.
Wonderful.
So really funny story about this, guys, is I talked about how Danielle and I relocated from Wisconsin to Texas back in 2018. And we came down here as a pretty quick transition and started looking for houses in the South Lake area because I still wanted to be near the airport because I was still flying around the country. I was happy to say that once we found the house that we were looking for, my record for getting from the house to the airport was 11 minutes. And by airport, I mean like to the gate at this point.
No, I can understand that. You kind of just know when to slide
Right in, right? But the really cool thing about that is we were hustling around, didn't have a lot of time to grab something to eat before we had to go see the next house. And we came across this barbecue joint called Feed Store Barbecue. It turns out, and I feel like I started at the pinnacle of the mountain when it comes to Texas barbecue because we stopped there, blew my mind on how good the food was. only to find out that to this day, it's still my absolute favorite barbecue restaurant in all of Texas. It also turns out that Doris and her family are the ones that own that restaurant. So it's funny how everything comes full circle, but your restaurant is the absolute best.
Well, just to make sure everybody's clear, it's the grandparent, it's Bill and Phyllis, it's mom and dad, it's their restaurant. Everyone else just works there.
Right, but it is so good, y'all. So if
Thank
you're
you.
in Texas,
Thank you.
or if you get the chance to get down to Texas and you're in the South Lake, Colleyville area, definitely make some time to go check this out. You will not be sorry, for sure.
Thank you.
So Doris, I've got you on today because Medicare enrollment opens next month. I figured this would be timely to kind of talk about the top 3 to 5 things that one should think about when either enrolling into Medicare for the first time or looking to change their plan during that period. Doris, y'all, is my Medicare expert. So when my clients have questions when it comes to Medicare, if I don't know the answer, I'll be the first one to say, hey, you know what? I'm not quite sure. Let me check. And I'm calling you to ask the question, and she's never led me astray. In fact, most of the clients that I work with that are enrolling for Medicare, I just turn over to Doris and let you handle it because you're the best at what you do from that aspect.
Well, I appreciate that.
So let's talk about Medicare in general. I know there's a lot to take in. Typically, the first thing that I get from clients is when they're enrolling for Medicare is the deer in headlights look on where to even start. So let's start there and walk us through that.
And this is one thing a lot of people don't realize that they have to do is you've got to sign up through Social Security. Because you have, if you've worked 10 years, you have Part A. That's when it says Medicare on your check. That's what it's
going
paying
to.
for.
Yep.
That's Part A. You have to sign up for Part B because you have to pay for that. Regardless of whatever plan you get, you always have to pay for Part B. Yes, there are instances where you may not, but the majority of the people, we pay for it. Mm-hmm. All right, so that's the number one thing to do. Please go sign up through socialsecurity.com. Then, once you get that done, 3 months or in open enrollment, you can apply 3 months before your birthday, or during open enrollment, you can then apply for Medicare. You have 2 options. And this is where it starts getting a little confusing.
Right. Something I think, and you mentioned enrolling in Part B that you have to pay for that. I think it's important to note that that's income based as well. So what you're paying on an annual basis could absolutely change year to year based on what your realized income is. Whether you're still working and enrolling but delaying it, or if you've retired, your taxable income, your gross income and taxable income will be taken into consideration on what you pay for Medicare that year. So.
Right, and it changes every year, of course it does, because of cost of living. But and it can get pricey. I think the top end is like $750. But I don't want to scare anybody because, for the most part, most average people, they don't pay $750. It's like, I think it's $175. Let's round
Is
out.
the average. But that's champagne problems, right? Like if you're paying $750 for Medicare,
Then
that
you
means you made a
definitely-
lot of money the previous year, right?
I have a couple of clients that are in that boat, and they were just like, "What?" And I said, "I know." I said,
Champagne problems.
I said, "Thank you for working your rear end off to support your family."
Yep.
But it's only a two-year look back. After that, then it drops off, and you can challenge it. Just know that you can appeal. Worst thing that can happen is they'll say no. You know. So, but once you get past that point, then you have to make the decision: what kind of Medicare do I want? Do I want original Medicare A and B with buying a supplement and a drug plan, or do I want to go to Advantage plan? And there is a world of difference between those two.
So let's talk about those two, like
Yeah,
those
and
differences.
that's probably I want people to understand that more than anything, because this could be life altering
I agree.
if you make the wrong choice.
100%.
You know, the first thing I ask people: where do you want to be in 5 years? Where do you think your health might be in 10? And where might it be in 20? Because you might not be able to change. It's not like you can go with your insurance, you know, from your employer coverage and go, "Oh, I want this plan this year, this plan." No.
Yeah, we got to put a plan together. Like without a game plan.
Yeah.
Yeah.
So with original Medicare, what that means is that's the Medicare that we've all grew up with, and it's good for any doctor, any facility, anybody that takes Medicare anywhere in the United States. You walk in, no questions asked. You just hand them your card, and you're good to go. You also, but Part B is if you remember your corporate insurance, it's like the 80-20.
Yep.
The government pays 80%. That's why you buy a supplement to pick up that 20%.
To offset it. Exactly.
Yes.
Yep.
And then you need to get a drug plan. And those can range. And that's another thing. Make sure you list out your drugs, and that way you can pick the correct plan. Because it'll price it out for you. And actually, that's on the government website. It is one of the best tools I've ever seen.
Yeah, they did a really nice job with it. Yep.
All right, so the Advantage plans. Those are the ones that are like United Healthcare, Humana, Aetna, Cigna, Blue Cross Blue Shield. Okay, if you purchase an Advantage plan, you are leaving original Medicare. And that's real hard, but you're still paying Part B.
Right.
So so everybody's just like, no, I'm still on Medicare. Not really. You are now with a private health insurance company. And you have to stay in network, in the service area. It may not, and which is real interesting because the plan may work here, but it may not work in Colorado.
Right.
Because
it's state to state specific. Right. Now, the question that I think people are going to have as well is, okay, is that a situation like once you do that, can you never go back? So is that a decision that has to be made? So I think that's like, can we say, just kidding and come back?
You have, if you go with an Advantage plan, you have a little bit of a look back where you can switch back. It's roughly at the first year.
Got it. Yep.
But if you try to go back, you can always go back to A and B. You may not get your supplement.
Or the supplement changes, right? Like you've got Part E, and I think we're on like what, Part H?
No,
or Part
it's
G at this point in time. So, they close off these plans where they open up a new one, and that new one may not be as beneficial or advantageous as an older one that you might have.
You also may have to qualify for it. You have to, so let's say you're 2-3 years down the road, and you were with an Advantage plan, and you want to go back to A and B and get a supplement, you now have to go under underwriting. And if you've had, heaven forbid, a heart attack or even a stent, that they'll probably deny you. So
potentially, yeah.
Yeah, so yes, you can always go back to A and B.
But you have to.
May not be able to get the supplement. So then you'll be liable for 20%. And everybody says, well, Advantage plans are less expensive than original Medicare. Not necessarily. I'm a firm believer of seeing is believing, and I compare them all out on a spreadsheet and go item by item. And look at that bottom line. It may not be. Because when you walk into a doctor's office, you have with original Medicare and a supplement, you have no copay. You just hand them the stuff.
Yep.
On an Advantage plan, you have a copay. You may not have a monthly premium, but please, nothing's free. So they're making it up somewhere.
Right.
So my recommendation to anybody is please make sure that you really understand what you're looking at, and make somebody put it on a spreadsheet.
Right. Which is why they give you 3 months before you turn 65, and even during the enrollment period, 3 months after you turn 65. So you really, at the end of the day,
have 7 months.
You have 7 months to make that decision. It's a very important decision, and one that shouldn't be taken lightly, and one, quite frankly, that when it comes to financial planning, can alter what your retirement looks like if that decision's not made properly, or if they don't reach out to someone like Doris to do exactly that. Let's lay out what your goals and objectives are, what you're looking to accomplish. To your point, where are we at a year from now, 5 years from now, 20 years from now, and what makes the most sense? Because I think what's important to realize is that 40 years ago, when people were retiring, their biggest concern wasn't what if I live, it's what if I don't live long enough to enjoy retirement.
Right. Yeah.
Now you fast forward, there is a better than 50% chance that a couple that reaches age 65, and if they're in the top quartile of all income earners, there's a 50% chance one of them is going to live well into their 90s. Wow. Now, most people don't think that they're in the top 25% of all income earners, But if your household income is approximately $125,000 to $130,000 a year, you're in the top 25% of all income earners. So you may not consider yourself rich or wealthy. Uncle Sam sure as heck does. So I think that's a good thing to take into consideration when it comes to that. What else should we know?
That's probably the biggest highlights is really, because then you get down to, depending on your first and most important choice is original or advantage plan. And like I said, I cannot emphasize this enough. Please have someone really map it out for you, because it's your health coverage.
Good advice.
You know, and I've seen horror stories.
Mm-hmm. Oh, I'm sure you have.
Oh, and it makes me want to cry.
Right.
I had a lady call the other day, and because of the plan she's on, she needed skilled nursing, and they told her it was time to leave. Yeah, and
Oh my
and
God,
I said,
what do you say?
I said, all I can advise you to do is work with your doctor.
Right.
To get back in, but and it was so funny because the lady, she said, Doris, I knew just to ask you because I didn't trust anybody.
Right.
And I said, I can't. There's not much we can do. I said, you've got to work with your doctor.
Right. Like if you knew there was something that could be done.
We would have.
I know you. Yeah.
We would have switched her in a minute.
Right.
And that's what I'm saying. So really think about it, because you don't know. We don't know what's ahead of us.
Mm-hmm.
And your health is the most important thing you have. You know, without that, you've done a great job with them with their income.
Everything else, but
if they're not healthy, who cares?
Yeah, awesome.
You know, so that's so very important. So please make sure you know the difference and really start thinking about it. And like I said, talk to Chris. Where do you want to be in 5 years? Because he asked you those questions.
Mm-hmm.
And think about it with your health also, because you might not be able to make it different.
Right.
You know, go back.
Point of no return,
Yeah.
for sure. Awesome.
So-
Well, hey, I can't thank you enough for
Thank you.
coming on today.
I
Always
do
good to see
have
you.
a dad joke.
Good. I also need a song of the week too. So
Okay.
let's hear the dad joke first.
Okay.
It's time for a dad joke.
So a football coach went to the bank. Do you know why?
Why?
He needed his quarterback.
Mm.
I thought that was apropos for this time of the year.
That's fantastic.
Yeah.
I love it. And there's a lot of teams that probably are needing to go to the bank right now for a
Yeah, they're
quarterback.
looking for that quarterback.
Right, for sure.
Yeah.
Song of the week, do you have a favorite song that you just jam out to?
I actually like Laney Wilson.
Oh, yeah.
Country.
She's great.
Yes.
Yeah.
And she has that Hang Tight
Okay.
song that just came out.
All
And
right.
it's just upbeat,
I love it.
you know.
Love it.
So, yeah.
Awesome.
All
Well,
right.
y'all, again, make sure, just like anything else, I've told you from the get-go, it starts with planning not only where you're at today, but where you hope and where you think you might be 10, 20 years from now. What I'm going to do is I'm going to put Doris's link on the YNDY podcast. So if you have more questions or wanting to get into a specific scenario for yourself, go there. You'll be able to click on that link and it'll direct you straight to her. Again, if you guys are in the South Lake, Colleyville, Grapevine area and you get hungry, make sure you go by and stop by Feed Store Barbecue and get yourself, in my opinion, and it's humble, but probably some of the best barbecue in Texas that you're going to find. Thank you.
Yeah, and if you go by, ask for Cammie or Wes. Those are my kiddos.
All right.
And they should be working.
Sounds good. Well, awesome.
Wonderful.
Thanks for
Have a good
coming.
one.
Appreciate you. Thanks for tuning in to You're Not Dead Yet, where we're thriving at the crossroads of living life and building wealth. Make sure you tune in and subscribe on either Apple Podcasts, Spotify, YouTube, or any of your major platforms, and leave us a review. We'd love to hear from you. We'll see you next week. Take care.
You're Not Dead Yet is a premier investments and wealth management production. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. Doris Lafevers and her company are not affiliated with or endorsed by LPL Financial or Premier Investments and Wealth Management. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks including possible loss of principal,